is the use of the term Cold War between the U.S. and China, is that too strong a term at this point
Yes.
in negotiations? It is.
Yes, that's too strong of a term. The two sides continue to engage. There is no doubt that we have some very difficult challenges ahead of us, but this is nowhere on the level of where we were with the Russians, the Soviet Union during the Cold War.
Okay, Erin Ennis, thank you very much. And as we are looking at this sell-off, intensifying with 17 minutes to the closing bell, please stay with Fox Business. We are going through straight until the bell does sound and trading does end on Wall Street today. Let's go there right now. At the New York Stock Exchange, we have Tim Anderson. At the CME, we have Phil Flynn, and we also have Alan Nuckman. Gentlemen, thanks for joining us on this crazy day. We just heard Erin Ennis, and she says, look, she puts a 50-50 chance on Washington hiking tariffs on Friday, Tim Anderson, and then, of course, China retaliates. What do you put on that happening, and how does the market respond?
Well, look, I think the market right now is responding to the uncertainty of not really knowing whether or not there's going to be a deal. We might have tariffs put on Friday. If they're put on Friday, might they be on for how long? We just don't know. And the old saying, of course, is the market hates uncertainty more than it hates bad news.
The market also hates geopolitics, Phil Flynn. What is impacting the price of oil today? We were down a lot more than where we closed. What do you see as affecting the oil market? Is it more supply or more demand waning?
I think concerns about supply and what's happening in the Middle East. I mean, today oil prices were following the stock markets pretty dutifully. And then we, of course, keep getting these bounces off key support, $60 a barrel held, but concerns about what's going on in the Middle East. Obviously, the tensions are rising there pretty dramatically. There was a report today that the U.S. sent some B-52 bombers to the Middle East. This is an ongoing and growing response to some unnamed threats from Iran. Iran, of course, the Revolutionary Guard made a threat to shut down the Strait of Hormuz, the world's most important oil thoroughfare, basically, and that really has caused a lot of those tensions in the market. But I'll tell you this, right now, the market's balanced between that and looking at the stock market and what it may do to demand. And you're seeing that fear play out in the price of oil. We're seeing it in the VIX index, which is just going back up to the high right now. We're seeing it in the bond market over there, you know, as we're seeing those yields get into a protective mode. And I think he's right. It's what we don't know that is scaring this market. It's not so much whether we get into a trade war or not. You know, listen, we've been through this before. Like a year ago to the day, I feel like I'm given the same TV hit, right? You know, because we were concerned about the trade war. You know, it's going to push us into a recession. We didn't know what was going to happen. And as bad as those fears were and the turmoil in the market the reality of the situation, it never turned out to be that bad. So we have to be cautious because the market does have a tendency to overreact to these things. And once we do get some type of a resolution on where we're going with this, things will level out.
And I wonder how much of today for equities, Alan, is an overreaction, because as Phil was speaking, the Dow went from down over 600 points to now we're down 576. I'm not making light of it. People are losing money today. It's ugly. But do you think we're going to start to come back a little bit here, Alan?
Well, first off, let's put some perspective on this price. We've come a long ways. The S&P had bounced 25% off of those lows, and so it's been a straight-up move. Let's remember, just at the close of yesterday, the S&P and the tech NDX were only 0.75% away from their all-time forever highs. It seems like more pain when you look at the numbers because we're at such lofty levels, but look at the percentages. We're off 2%. You know, that's very reasonable. It is uncomfortable, obviously, to see this sell-off, but I agree with Phil. Optimism wins, and we'll have to look to see how this all gets sorted out. Obviously, this is a very unique negotiating tactic to force everybody's hand right away, but I don't think China is in as much of a hurry to get things done. You know, we've got constituents around the country that are going to suffer if prices continue to rise. You've got the soybean farmers, you've got the U.S. Manufacturers for their supply chain, you've got the importers, and they're going to pass those costs on along to the consumers, and that's going to make some noise in the long run.
And that noise is inflation, Tim Anderson. Then the Fed might have to respond.
Well, I think we would have a long way to go to get real inflation start to show up at the consumer level. One of the guests that you had on in the middle of the day, Brian Westbury, made a great point that even if we raise tariffs on all of the Chinese goods that came into the country, that will only be about 2% of all the stuff that we buy during the year.
Yeah. Well, investors are certainly, you know, you guys are giving our viewers perspective here. But if you look at yields, the 10-year Treasury yield, yes, tumbling. Investors seeking safety. We're at 2.4 and change. If you look at the 10-year, what is that? 2.44% right now. Phil, what does that say to you?
You know, it tells me that people are scared. They're looking at the numbers and they're looking for some protection. But you got to remember, it was just a couple months ago we were worried about the inverted yield curve sending us, you know, into a recession, and that was sending us false signal. So I definitely think it's a market reaction to the uncertainty where you have to kind of move with what the markets are saying. But, you know, it's kind of interesting. You think this could be very inflationary, right? So you would assume the commodities would be exploding here, but they're not. You know, if you look around the board, you know, we're seeing the grains get really beat up, you know, because they're concerned we're not going to sell grains. You look at the oil prices, they're lower on this news. Gasoline prices are down. So it's kind of counterintuitive, you know, in the long run, you know, the fear by the marketplace is, oh my gosh, inflation could be here, we'll have to raise rates. But the reality is it's been disinflationary, so that should balance that off a bit.
And Alan, I also wonder, as we talk about the unrest in Venezuela, the unrest in the Middle East, particularly Iran, in North Korea, as we look at all these pockets of uncertainty, China is just the icing on the cake, right?
Right, but what's important to notice here is the way as gold's reacted. Gold is pretty steady all day today.
Yeah,
we haven't had any big flight to quality there, or, you know, some buying there. Yes, you saw a little bit of a bounce in treasuries. Yes, the VIX has rallied, but this is the first time the VIX has gotten above 20 since January. So let's remember that last super VIX explosion that we had. The VIX was up at 36. So, you know, yes, this has been a big run, but it was only 3 Wednesdays ago that the VIX was trading at 11. So things happen very quickly, both positive and negative. Let's see where we are by week's end is what everybody's going to be looking for.
All right, Tim Anderson, Phil Flynn, and Alan Nuckman, thank you so much for sticking with us with 10 minutes to the closing bell. Let's take a look once again at the Dow 30. Not a single stock is in the green today, but we certainly cut into the lows.